Hi guys, thanks for tuning in to another episode of Nuggets News, and today we welcome back a special guest, Mike from Brighton Capital. How you going, Mike?
G'day, Alex. Good to see you again. Yeah, thanks for having me back.
I'm looking forward to talking about where global markets are at, where crypto markets are at, and how it all
Yeah,
ties back and what you can do about it, guys. So, what have you been looking at recently, Mike?
a lot of what I've been focusing on, has just been real kind of the big picture stuff. Um, when markets really heat up, everyone's looking for that. When like mooning in the next, week, month, and those real short-term gains. When the market comes down, it really calms down a bit, allows you to step back and have a look at the big picture stuff, what's really actually happening.
Mm.
And if you do have a look at, that kind of stuff, really every single metric apart from the price is up and to the right in development and adoption in third world countries like Venezuela and in Argentina. And really at both ends of the market are, building what's required for the next rise, both in crypto and also in global markets in general.
Yeah, and I wanted to talk about that point you raised up about the cleansing or the gentrification, and we've spoken about it, I guess, in the past on the channel a little bit, but I certainly see that happening. And when people call this tulip mania, and it's sort of like, as someone that sits here every day, and there's so much content to report about every single day, I mean, it just is all heading up to the right, as you say.
Yeah, so gentrification kind of might get a bad rap. It's really not reserved just for the institutions and the governments. It's kind of like just a pattern of behaviour that happens across humans. From kids in a kindergarten, all the way up to the top of the people trying to run the world. And all it is a group with the power to manipulate the market, doing that for their own profit, not necessarily to screw everyone else over. They just don't care about the other people. It's just a game, and they're going to do what they can to get ahead.
Yeah, and we also see that sort of thought process towards traders and shorters, and that bottom of the cycle, people going, can't believe they drove the market so low. It's like, these people have made a lot of money, and they're going to put that money back into the market, and they're going to push it back up. So you've got to have it both ways.
Oh yeah, we're still so very, very, very early. It's going to take a tiny proportion of fund managers, funds and money in Swiss bank accounts. A good note is the Swiss banks aren't what they used to be. They used to be pretty safe and secure. Now pretty much every country has got an agreement with the Swiss banks to be able to look inside and chase people up for what they owe in tax, etc. And that they're going to be looking for another option. So it's going to take a tiny percentage of even just that one side of the market to really heat things up.
So where do you think global markets are at the moment? I think the focus has been on the Fed, and as we said on the channel, it was a game of chicken, how fast the Fed were going to raise interest rates, and the market called their bluff and tanked, and now they're stepping back and saying, okay, there's too much debt, maybe we're not going to raise interest rates. And I think if that happens and we actually head into that next cycle of easy money, then it's just going to be an even bigger bubble.
Yeah, look, I'm not really concerned on the stock market front for a few reasons. We came back down, and globally we pretty much hit 20%, which if we stayed over there would have signaled the start of a bear market, but we didn't. We came straight down, tapped it, worked our way straight back up. There are a few jitters in the market, so short term, my view is it's just going to be pretty choppy, and we've still got things like China, Brexit that are kind of driving that uncertainty. But if you have a look at the Aussie mining stocks over the last couple of weeks, they've been going berserk.
Yes.
And that, we get that movement from China. And so there's optimism coming into China as well. And in Europe, okay, Brexit, I don't really care about Brexit anymore. Like when they, try and renegotiate, over in Brussels say, yeah, no, that's not what, you're just going to get, that's the deal and that's just going to tick along. But the reality is if it's not going to be the UK, it's going to be Portugal or Italy. Or Greece or Spain, because none of the problems that those countries have been experiencing over the last 15, 20 years has changed. It's all still the same. But the big driver of the market that I see that's going to really eclipse all of these shenanigans is the fact that millennials are the biggest demographic in history, biggest demographic alive at the moment and in history. And they are now entering their peak earning years. And they've only just started to enter their peak earning years. And that is a huge, huge macro, situation that we're coming at the very, very start of all these new people having money to go to Kmart, to buy their TV. But not only do we have, millennials in the first world, we've got millennials all over the world going from third to first world living standards at the fastest rate in human history. So okay, America may fall away a bit, Europe may fall away a bit, but globally, so markets are generally, well, they are driven by GDP. Okay, how much economic activity is actually happening? And we've got more people being able to buy more, moving up that living standard rudder. It's, I think we're at the start. Something could be so much more than what the short term markets are worried about, and it's going to be driven by real growth with real people buying goods and services, which is what markets should be, we're working on. And Powell at the Fed, he basically said as well that we'll aim to be increasing interest rates, but we're still going to keep all the tools in our arsenal. So basically, that's saying if the market drops, we're going to print money again. Yeah. And so overall, not particularly worried. But obviously, you just need to pay attention to what's going on and make decisions accordingly.
I think that's some great points that we could unpack there. So even if markets chop sideways, you have to have a narrative. And in Australia, the lower Aussie dollar, the gold stocks, that's been a huge play, as you say. You just touched on some emerging market themes, the billion middle-class citizens. One thing that I think about is who's going to make all those goods and services? Who are they going to outsource the cheap labour to? Is it the last piece of the puzzle?
Yeah, and really good questions. But and something I've been thinking about a lot recently, and this plays into crypto as well, specifically, is we're in a situation where let's have a look at the two kind of best performing cities that have come out of nothing in the last 50 years would probably be cities like Singapore and Dubai. And there are a host of others, but there are fundamental reasons why they succeeded. And so from my point of view, there are three. So one is energy, access to cheap and reliable energy. Number two is property rights. So trusted property rights where you can actually go and buy a piece of land or something, and you know that the government is going to back you, or they're not going to be able to easily just come and take it away. We've had stories in Honduras where the government just come in and just give themselves beachfront property, all that kind of stuff.
Yeah.
So energy, property rights, and the other one is a low friction business environment. So low tax, not needing a license for every single thing under the sun.
Yeah.
And those things, so if we unpack those three, with energy, and this is another play for the third world countries, the third world countries are mainly around the equator. So, across Asia, South America, Africa, and they have the highest irradiance levels in the world. They get the most sunlight. And that's a big deal because solar power is now it's going to be the biggest energy source in the world, again, in my view.
Yep.
And the technology for solar is already awesome. You've got deals going around for 2 cents a megawatt hour at the moment around the world, which is like coal. To start up a coal factory, you're looking at 6 cents. So it just makes no sense. You're crazy. If you're opening up coal, you're crazy. We need to talk to the Australian government about that anyway, but it might be another discussion. But that's a massive tectonic shift in the way the energy game is played around the world. The only missing piece of the puzzle there are batteries. So batteries are, they're still expensive. The number of cycles that they can actually use isn't really there yet, but it's improving at a rapid rate. Like they're falling by half. All of these technologies are exponential. Whereas the cost of, for coal, which is pretty much the next best, is pretty much, hovering around that 6 cents. So these third world countries are going to become net exporters of energy and going to have more energy they could possibly use to produce those goods and services that we're mentioning. So that's the energy side of things.
Yeah.
So I just sorry, there's a bit of a rant with the three. So we've got energy, property rights, and low friction. So Bitcoin really solves property rights in the low friction environment. So you take something that just says, we trust our government, to having a trustless. It's literally from a value of 1 to 10. Well, no, it's in the value of affinity for a trustless environment. So you know what you own. And you're not going to be able to confiscate your Bitcoin. And then the last one is if low friction business. Well, crypto's peer to peer. There's no one that can get in a way of that transaction. So we're going from a situation where you've got to kind of move to these geographical areas in order to take advantage of the fertile ground that will produce economic activity. But now that's literally going to be it's going to be global. And let's say you've got normal cities were this much on the factor, and then you've got the successful ones like Dubai, being this big. Well, every single person on the planet is now automatically this big, but not only that, way higher. So the amount of economic activity, I think, is going to be coming in the next 10, 15, 20 years. It's going to be like everything that's going on now, like a blip in the radar. It's going to look like the crypto boom and bust of 2013.
Yeah, and we just saw that news that a big property company in Dubai are starting to accept Bitcoin and Ethereum, and I think blockchain and real estate and securitization, that's all going to go hand in hand. Such an exciting time. And energy, as you said, I love something like Power Ledger that's doing more in developed countries. And this brings me to my next point about how do you see Australia capturing or taking part in those three things? Because I really worry that there's too much friction, too much regulation. We just finished our feature, our special presentation talking about the economy. 36% export in the world to coal. We're so focused on construction. I just think that we're not moving in the right direction enough.
Yeah, that's probably a pretty good point. And the other, so all of these things, because everyone's going to pretty much have access to the same level of it, it's going to level the playing field. And at the moment, obviously, we're ahead of a lot of the world. And we're probably, maybe into a bit of strife, and we need to kind of rethink about how we go about things. But what the government have been doing in regards to the, having to give you passwords for your phone, when you're going overseas, I think that's going to be literally ignored by, again, the demographic of people who are coming into their, not only the prime earning years, but the time where they're most powerful in society. And, it's the millennials. They're a technological, generation. They want things, their way, and if it's not, they can get around of it easy, like downloading a movie, from Popcorn Video or whatever else.
Yeah.
They're just going to do it, and they're not even going to think about it twice. So, but it'll be interesting to see how Australia does perform.
I think you've touched on those important points of millennials and their spending habits, and I think they're going to make different life decisions to their parents, whereas the great Australian dream to own a home, and now people are having to fork out 40% of their income. I think millennials are going to say, you know what, I'd rather maybe rent, as we see in Europe. I think I'd rather go on a good holiday each year. I'm going to spend on my Netflix and all my other technology. That's why we see the big tech stocks booming in the US, and again in Australia, we just have no innovation in our listed companies or anything like that in the large end of town, I should say. I'm sure there's some smaller bright spots out there.
Yeah, we do have a little bit of land that gets a bit of sun as well, though.
Yes.
You know what I mean? So that's probably our saving grace moving forward. But yeah, again, time will tell. We'll just have to pay attention.
So getting back to the self-managed super side of things that you do, Mike, what sort of themes are you seeing? And have you noticed people that are starting to get into crypto on this message that we hear of get off zero? I'm not sure what the right percent of exposure is for each individual person, but people want a little bit of exposure to this new asset class.
Yes, it's really just being able to take a position that's not so reliant on the legacy markets. And the reason that's an issue now, it wasn't so much in the past, but because there's so much debt in the market at the moment and interest rates are so low, all the markets pretty much move the same because it's all about just getting as much debt as you can, and companies are actually buying back their stock. So there's not a lot of new economic activity that's going there. The companies just buy back the stock so the directors can get the bonuses and that kind of thing. But what I like about the potential, if interest rates start to rise, well, that will actually separate that, and we might get normal market movement. And then you can, actually diversify. But until that happens, Bitcoin or crypto is a great hedge against the normal market. Because in your normal super, if the market performs well, your super is probably going to perform pretty well. If the market takes a dive, your super is probably going to take a dive. Having the ability to diversify, there was an article a couple of weeks ago, I can't remember who it was, but it was talking about if you literally just had cash and 1% exposed to Bitcoin, you outperform the S&P by X amount, like a large margin. And this definitely isn't about, risking your financial future on this coin, that coin, or the other. It's just realizing that, being exposed to other markets, as long as you have a long-term view that those markets are going to survive and thrive, might not be a bad idea. So I think a theme that we're kind of seeing, and it's something that I espouse to as well, is the banking, it's like Pomp, short the bankers, on Bitcoin, short the bankers. So if you're running your own, doing your own investing, you don't have to be exposed to the entire market. You can pick and choose the kind of areas that you think are going to perform well. My view is that there's going to be a lot more solar than there is now. Yeah. And there's an opportunity to buy exchange traded funds that are just exposed to solar producing stocks. Yeah. And crypto is just one of those plays. Crypto is definitely not the only game in town. It's pretty exciting. I think it's great. Obviously, your viewers think it's great as well, and it has a lot of potential. But there are a lot of other areas of the market that you can choose to be exposed to.
Oh, yeah. Recently in our premium education stuff, we tried to switch. I want to talk about like options, ETFs. People just don't understand, as you just touched on, there's a solar ETF. If you think water is another big theme that's going to play out, you can just buy and have exposure to water ETFs. It's fantastic.
Yeah, it really allows you to pinpoint the area of the market that you'd like to be focused on.
Yeah.
It also allows you, if we're like having a chat about SMSFs for a second, allows you to short the market as well. So normally within an SMSF, you can't have any debt, you can't owe any money, you can't short a market. Pretty strict rules. Either you own the asset or you don't. However, there are exchange traded funds that track the price either inversely or on a leverage of these markets. So if you really want to increase your exposure to, the S&P 500, you can buy the SPXL, I think it is, that gives you 3 times leverage on the S&P, or you can do the SPXS, which is a 3 times leverage short on the S&P.
Yeah.
So so I'd encourage people who are interested about this kind of stuff. I'd encourage them to check out a website called etfdb.com, so exchange traded fund database.com, and you can do a search for the kind of industries that you'd like to be exposed to. So that can be, the huge markets like the S&P 500, or down to types of semiconductor stocks or tech or really niche. And also, it helps with your trading, helps you understand what's going on in the world. You don't have to, put everything into it, but it's good to understand the tools that are available to you if you want to be, doing your own investing and managing your own funds.
Yeah, and for people at home that might have gone a little bit over your head, what Mike's saying is there's an inverse ETF that'll go up in price if the asset goes down in price. So if you think gold's going to go down and you're not allowed to short in your SMSF, you can buy that and it'll go up in price, and that way you've obeyed by the rules and built money with your narrative by doing it the right way.
Exactly.
Cool. Any other points you want to touch on today, mate? There's so many directions we could take this conversation, but what did you have as your talking points?
Yeah, we've covered a lot on what I think is going on with like globally, like the big picture stuff, and I think it's important, really, to focus on the big picture stuff more than the short term stuff. I think you should earn the right to be trading short term stuff by making sure that you start really small and build a little bit of a base, and as you make money, give yourself permission to trade more of your funds, and really focus, because the longer view you have, I think the better chance you have of actually being right. Is crypto going to be a thing? Is solar going to be a thing? You're not really concerned about the month to month variations of this side versus the other. You're more playing like an ecosystem play over the long term, and that is how the big money holds their wealth.
And for people that are interested, they can ring you up, and I think you guys have got an initial free consult to have a talk to someone so they can build a narrative and all that sort of thing.
Yeah, so while I love talking about the markets, but what New Brighton Capital does, so we help you set up that SMSF in a way that satisfies all the ATO requirements and just everything straight legally. And then on the back end, we look after all your tax and compliance and audits and all the stuff in the back end that has to be done just to make sure everything remains legit. In the middle, you've got all those decisions about where you want to be parking your cash. So the investment decisions, that's what we're not involved in. If we did, we'd have charge a lot more. It'd be financial advice. And so our bread and butter client is someone who knows pretty much where they want to be exposed to. They're just looking for a service and a product that allows them to do that without having to worry about all the stuff on the ends.
And if they are interested as well, one thing that I only found out this morning was you can pay for some educational prescriptions, such as our premium education, with your self-made super.
Yeah, that's right. So things like courses and subscriptions, as long as they're in the name of the self-managed super fund, can be purchased for that, because it's the cost of doing business, just like the setup costs are a cost of actually running your fund. So it's a probably good idea to note that if people don't really have a lot to be like the day-to-day paying for subscriptions like this, well, as long as it adds value, then you can actually have your super fund pay for it.
Fantastic. Well, any final thoughts, Mike? I will put the links in the description below for everyone to ring you up and say g'day.
Yeah, sure. So we do have a Nugget viewer deal coupon code going on at the moment. So if you basically, when you fill out the online form to get your SMSF, you can actually there is like a coupon code area. If you actually put in Nugget there, all Nugget subscribers will actually get a free Trezor when they become an ongoing client. So and there's another bit of a deal for your exclusive community as well, which I'll let you share with them on that private network.
Awesome. Well, thanks so much for joining us today, Mike. It's been a great chat as always.
Okay, great. Look forward to seeing you next time.
Cheers, guys.
Thanks, Nugget.